Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Sunday, August the 16th. The year's 2020. Let's talk trading. It's time for the weekly open and gap. And as you should know by now, these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. Make sure your risk management's in place and your brain management, that you don't have any fear or regret when you're at your trading platform, and you have your money management in place so you take profit before the market takes it back. And as we can see here, all the gaps have filled and it looks like the spreads have settled down. And we are putting in the opening range for the week. You can see here we're still within the opening range for the month, which is just below the opening range for the year. And right now we're on the third up day for the pound, so look to take some breakouts here. We're above the previous middle of the middle of the previous day, 145 pips below the yearly open, and we're right at that inside bar that happened 5 days ago. So look for a breakout here at 1.31028, call it 3103. And we do have some inside bar action this week on the day, week, and month. So any of you looking to trade inside bars, there you go. The range, it's still early in the day. We're 5 hours into the day. So, and we've only got 24 pip range on the pound. Buy zone, you can see the pivot was right here. So there was really no bias using the pivot, but we did gap down. But the thing is, this spread was just, I think this was the ask and this was the bid. This first candle sometimes on this platform is pretty bogus. The spread was just ridiculous. Range too low on the buy zone. I'm sorry, on the rat zone. We've got a weekly pivot at 1.30761, it looks like. No, that's the open line. The pivot line's at 1.30765. Or that's for the pivot line, 1.30771. So look to take out the weekly pivot. Why? Because we haven't missed a weekly pivot. And we missed one last month. We missed two last month. But as you can see, we hadn't missed one until back to April of 2018. So look for some of these pivots to be taken out. Big wick zone here. Price has gone in and hasn't come out yet. Might come out the top, might come out the bottom. Chances are it's going to come out. Not too much to say about the range right now because we're only at 24, other than the fact that chances are it will probably either break out of the high of this candle or the low of this candle at some point. Maybe this hour, maybe not. And looking at the scalping chart here, one of the ones setups that I use here. You can see here we've got the 00 psychological. We've just put in on one ball on the 3-level ZZ semaphore indicator that I modified. So we'll be looking for a long next bar. And you can see how price just jumps. And back to the simple price action chart. 1 hour candle color at the line long, at the line short, at the line short, now at the line long. Sometimes just looking to take a couple of pips. You know, I was watching some other videos and listening to some other traders talk, and they were talking about whether or not you can make money at this game as a retail trader, the difficulty it is. And, a lot of them were saying that it has a lot to do with psychology, and which is something that I've been talking about mainly because, these systems, these methods of entry, sure, we can find things that'll have an edge, but do you have an ego that will allow you to trade the statistics? In other words, are you going to get mad, so upset, if you lose the first trade of the day that it just takes you out of your game? And then you maybe do some revenge trading or just airball trades or just do things that aren't even remotely associated with your trading plan? Or can you take that loss and go, okay, that's a loss, no big deal, wait for the next signal and we trade again? And if it's a winner, no big deal, we won, we're going to wait for the next trade signal and trade again. Because you've done all your homework, you know that if you take a certain trade, that over a large number of trades, based on statistics, so long as you apply your money management, you're going to come out ahead of the game. You might have a losing day, but at the end of the week, you could be positive. Or you might have a losing week, but at the end of the month, you're positive. Or you might have a losing month, but at the end of the year, you're positive. So you don't live and die by every tick or by every trade. It's just that simple. And if you play sports, every time you get up to the plate, you're not going to get a hit. Every time you shoot a basket, you're not going to make the basket. That's just the way it is, and trading's no different. Some trades are going to go your way, and some trades aren't. And the thing about trading is, or one thing about trading is, the market doesn't even know you're there. And I've mentioned this before, but so I don't know if everybody's really burned that into their brains, because I can tell because of some questions that I get asked, some of the requests I get. And I think some people's egos get in the way because they can't stomach a loss. It hurts them, it destroys them mentally. Somehow they attach their self-worth to the trade when the trade's got nothing to do with you. You have to learn to laugh. I mean, sometimes I get in a trade and the minute I click in, it'll run against me like 3, 4, 5 pips. It's like, how did they know? But that's just what happened. Sometimes when I trade and I'm using my spread dots here, I'll get in right when it changes, and you can see there's a 4.7 pip run. So I might pick up 2 or 3 of those pips, and there's a 3.7. But there was an 01, and I don't even know where that would have been on this chart. But then it turned around and went against the buyer by 3.4 pips. That could have, that could have been me. I don't know. I could have been in that trade. Right here, I see it's going up. I click in, then all of a sudden it reverses. I can't let that affect me. Because it doesn't matter. It's like, if I stop out, I stop out. If it hits my break even, +1 or +5 or whatever, trailing stop, or I just take profit because, hey, it ran up 10 or 15 pips real quick. I'll take it before the market takes it back. I'm happy. And those little wins can add up. But there's so many traders out there. They're looking for those 50 pip, 100 pip, trades because they saw something on a website or trading forum, or they heard this guy has this body, wants to sell you for $37 that makes all this money. And I'm not trying to rag on anybody else's system, but I mean, you just kind of have to take that stuff with a grain of salt. I mean, you could say, well, how about you, TRO, the rumpled one? You're out here pushing your methods, your systems, your indicators. It's like, I'm not pushing anything. I'm just sharing what I do. If you guys want to put this in the recycle bin, that's okay. I'm not trying to force my methods on anybody. I mean, yeah, I poke fun at the squiggly line guys only because I used to be one. So I'm kind of poking fun at my past self, for believing in that stuff. I mean, it's just too funny. But, it doesn't mean you can't trade it and be successful. In fact, I'll just tell you that. Wait about a week or so, and you just might see something, and you might go, oh, it can't be true that the TRO is actually using a squiggly line to trade. But like I said, that's my little tease for you. And it'll come out in a week or two, I think. We'll just have to see how it works out. But anyway, and part of the reason I'm doing it is to show how it's not so much why you get in the trade, but it's more about being able to follow a plan and then using money management. Because to me, your money management should be totally separate from your entry. Call it your entry management, or the reason you get into trade, or your entry trigger, whatever you want to call it. You should have, and that money management you should figure that out first before you even figure out which method you're going to use. So it doesn't matter if it's a moving average crossover, or a horizontal line crossover, or support resistance, any of that stuff, supply demand, doesn't matter. Have your money management in place, your risk management in place. That way, no matter what the system is, you're not going to blow your account on one trade. And if you're looking at some system that tells you, you need to have a 50 pip swing, then don't expect to be making any real money, because you're going to probably have to have such a, trade one mini lot, and you might make $5. I mean, is that really what you want to do? You got to decide for that. But anyway, I hope you all had a nice, safe weekend. Thank you for coming back. And I just want you to remember one thing when you sit down at your trading platform. It's not what you trade, it's how you trade it. So get out there and drain the banks. And if you haven't, click subscribe. And everybody watch this video. Come here on YouTube and click the like button so get pumped up. Because some of you wonder why I don't have thousands of subscribers and views. Well, because you're not liking my videos on Facebook. Because the more likes I get, then the more likely this video will appear in somebody's feed. So that's it. TheRumpledOne signing off.